and welcome. You're watching Closing Trades in ET now. I'm Anisha Jain. With me will be Ajay Sharma. And for now, the markets are trading in the red right now. Very close to the lowest point of the trading session, 21,640. In fact, throughout the day, we have been languishing below the 21,700 marks. It's Bank Nifty that continues to underperform. So you have a cut of over 400 points on the Bank Nifty as we speak. And today, even the mid-cap and the small-cap indices have succumbed to the pressure. So there's a bit of a fatigue which is coming into the market, not running away in a hurry. So definitely after that big run-up that we have seen end of November and December, there's fatigue coming into the markets right now. As far as the other, sector trends are concerned, it is of course Pharma, which is seeing quite a bit of spike. That index was up 2.5%, and a lot of variety of names, right from a Glenmark Life to a Spark to a Mankind Pharma, they are up anywhere between 5 to 10%. Even Lupin on the back of that Motilal Oswal, or rather Nomura note, I beg your pardon, is up around 6%. Alembic Pharma, GSK Pharma, these are some of the names which are doing well in the trading session. In fact, just wanted to bring up some price volume buzzers before we move ahead. Glenmark Pharma, that's seen a breakout from the key pivot high levels. It's hit a 6-year high on an intraday basis, trading out of all key moving averages, volumes almost 3x the 10-day average. Aditya Birla Fashion, that suddenly saw quite a bit of spike during the trading session today. It's reverse head and shoulder pattern. It's trading above the key moving averages, and the volumes are 8 times the usual that we have seen. So a big spike on Aditya Birla Fashions and on heavy volumes. Delta Corp 2 has seen quite a bit of breakout. Volumes are 3x the 10-day average or 2x the 10-day average, and has hit a 3-month high on an intraday basis. So all of these individual buzzers are what is really keeping the market alive, because other than that, Ajay, it's a very subdued, tepid, muted kind of day we have at our hands.
Well, it all depends upon where exactly are you looking. If you could fire the mid-cap index for the day gone by so far, the BSE mid-cap and the BSE small-cap indices are actually reversing bulk of the weakness seen in the first half of the trading session. And that's why I was telling Anisha, depends on where you're looking. The entire weakness has been bought into. The small-cap is breaking into the green, and so is mid-cap. If you talk about the Bank Nifty, that made the highest point in the first half-hour trade. Fair point, and no attempt of recovery so far. But look at what the Nifty is doing thanks to Pharma names. There are very good moves coming in some of the underperforming PSUs so far. Look at how EIL has moved up. And then who can forget the stock, forget me not kind of stock. Every time there's bad news and stock falls, it comes back to remind you that, I'm talking about Z Entertainment. There's a lot of entertainment which has happened on that stock for the last series, but it appears that it has absorbed all the weakness and is back at 290. So it depends on where you're looking, but yes, the volumes are still not really picked up. The last hour trade yesterday fell on weakness, had set in on low volumes. Today also, a whole lot of massive participation is not there. So it appears like a dull day. Kunal and Nuresh both are also giving us company on this afternoon. Kunal, how would you rate? Because Shivani Sarkar is also there on fundamentals. Good afternoon to you as well, Shivani. So, gentlemen, I was talking to a couple of people, professional, big traders. This kind of a weakness in Nifty and Bank Nifty is emboldening the bears a bit. That's the sense which I got. Some are trying to open up some fresh shots. Will it be worthwhile in your view? Kunal, let's start with you on Bank Nifty and Nifty, or this dip actually should be bought into?
No, so I think the dip should probably accelerate, not accelerate, but extend for the next couple of days. Okay. Now there is a very significant change of data point which has happened today, which we've not seen over the last 1.5 odd month specifically, and that is emergence of call writers. So as you say that there has been good confidence which has been brewing into the the bears as such. Today, for example, 48,000 strike on the Bank Nifty and 21,700 and 21,800 both cumulatively have seen one of the highest amount of call writing for themselves. We are talking of a weekly expiry, which is tomorrow for the Bank Nifty and day after tomorrow for the Nifty. So that indicates that for the next couple of days, traders have started to get into a belief that maybe the indices may not break past about these two hurdles. So 48,000 on the Bank Nifty as well as 21,750, 800 on the Nifty. So I think I would probably be looking out for the next 2 days where the indices may consolidate a bit, but chances of the index breaking out on the upside in the next 2 trading sessions is very low.
Okay, so you're making a case that it may drift lower.
Yes.
Not a massive fall.
Not a major correction.
Major correction, but it may drift lower. Anisha?
Yeah, let's see whether it happens or not, but there is definitely some weakness and there's no, a very strong buying interest right now. People are on the sidelines. But I want to bring in Naresh into the conversation as well. And Naresh, I wanted to specifically talk about a couple of these big buzzers right now. A couple of the gas companies are actually moving higher. Gujarat Gas, yesterday we explained to our viewers how the propane prices, hiking is a good news coming in for Gujarat Gas as well. Given the fact that the competition weakens, we should perhaps pull up the intraday chart of Gujarat Gas because that continues the move today. And the other one I want to talk about is Aditya Birla Fashion. Heavy volume, suddenly a 7 to 8% move. And if I remember it right, in the last 1.5 months, the stock hadn't done much.
So starting off with Gujarat Gas, the stock corrected all the way from 800 is where it topped out in 2021 down to 400. So it was a 50% drop across Gujarat Gas as well as IGL and other names. Then it again made a bounce back to 530, 540 levels. Again, we are back at 400 3 months back. So a classical double bottom is done out here and we have created a strong base. And now going forward, it could retest those 530, 550 levels, which has been a resistance for the last 1 year. So positive on the stock, but a buy on dips at current levels, the risk reward is not great. Then going into Aditya Birla Fashion Retail, that's been a disappointing stock in terms of the way the price action has been for a long time. Even for the last almost 8 to 10 months, it's been in a very tight range, 200 on the downside, 245 on the upside. We've come very close to the breakout points. So we would wait for, say, a couple of days more because it's been a sudden one-day spike today with very huge volumes. Could see some bit of a fade off tomorrow, and that's the time one could look to enter around the 235 to 240 mark.
Shivani, it was almost like in the last week of December, everybody on the channel almost and in our circle, in our conversations was coming back and talking about, let January come and then you see how FI flows will come back, etc. As if like clockwork, FI flows from 1st of Jan onwards, there's a rule that FII flows will start becoming healthier into emerging markets like India. Yes, DM, the dollar index has fallen. Yes, the acceleration in flows have been seen last few weeks, but it doesn't happen like clockwork, right? If they have to come, they'll come with their own ease and not exactly 1st of Jan, 2nd of Jan. Every day there has to be a buy figure from FI side. So expectation on this sort perhaps were misplaced, no?
Is that question for me?
Yeah, that's correct, Shivani.
Oh, okay. Hi. Good afternoon. So yes. So as you are rightly pointing out, it's not that it works on a particular date or a time in terms of a clockwork sort of a reaction. But however, when you look at the flows that we have been getting, especially where India is standing out in a relative context to the emerging market pack, given the fact that our macro as well as the earnings growth trajectory, both at an absolute as well as relative basis, has been extremely strong. So if you look at the year 2023, I think for me, the standout feature was the fact that unlike many years in the past where we saw earnings downgrades, earnings actually got upgraded. And therefore, when you look at India's valuations in context to return ratios as well as earnings growth in the entire emerging market pack, India clearly stands out. However, for an FII or for anyone investing into India, they look at India in the global context and therefore valuations do play a role. And in that context, when you look at India's valuations on a relative basis, India continues to remain expensive. However, our belief is that given India's performance on the earnings side as well as macro stability as well as growth, valuations will typically always be at a premium, and therefore we should look at India more on a PEG basis rather than just a PE basis. And therefore, we do believe that India still remains fairly favorable in the emerging market context. Globally, if interest rates come down, that's also favorable for the emerging market pack as well. And therefore, from that perspective, India continues to remain fairly impressive in the relative EM pack.
I want to scratch that point further, Shubhani. Hi, Anisha, this side. So,
Hi.
yes, the market move has been in tandem with the kind of earnings upgrade that we have seen as well. But the question is the pace of upgrades going to slow down materially, and perhaps the cycle would reverse in the sense that there might be some downgrades that might start? And I ask that question because the early commentary that we've got from the FMCG players or the IT players, or even autos for that matter, is not showing that amount of strength right now. Do you think at the end of the Q3, because we are right now at the cusp of the Q3 earnings season, there might be more downgrades than upgrades?
No, so we are not expecting to see any major earnings downgrades. But if you look at the first half of the year in terms of earnings, first half of the year has been extremely strong. And from that pace, you might see some amount of slowdown on a quarterly basis. However, we do not expect to see major earnings downgrades. And if you look into the next year as such, which is FY25, earnings expectations continue to remain fairly healthy in the mid to high teens, which is again supporting Indian markets and valuations. I think what we need to watch out for is one, so far earnings has been predominantly led by domestic businesses, which are still holding up well. The second sector, which has also been a key contributor to earnings, has been the banking sector. Here, incrementally, you are seeing some degree of margin pressure, and therefore you need to moderate earnings from that perspective. But banking still will continue to remain one of the large contributors to the overall profit pool if you look at the markets. And the third aspect that we need to watch out for is, unlike the previous year, which is FY22, FY23, FY24 has seen more broad-based earnings trajectory, so more sectors contributing to the overall earnings pie. So at this point in time, given the fact that the outlook on earnings remains fairly intact, we don't expect to see major earnings downgrades for 24. Of course, we'll have to wait and watch and see commentary going into FY25, especially where consumption, discretionary consumption goes, and IT. So these could be two large spaces where you can see some improvement going into FY25, and that could help support earnings as well.
Point taken. Time now to take a short break on the show, but before we do that, let's pull up the intraday chart of a few of these tobacco companies. VST Tillers, that's sitting on a upper circuit, 20% higher. Godfrey Phillips was the other one that was perking up during, not VST Tillers, I'm talking about VST Industries if I misspoke, because that stock is logged in upper circuit. We should pull that up. You also have Godfrey Phillips, which is high around 4 to 5%, and I think even ITC is now showing signs of breaking out. So let's watch for that one. Not sure if something specific is happening, or maybe just no news ahead of budget is a good peg.
Well, the only thing common between the three is cigarettes, right?
That's what I said, the tobacco industry.
Yeah, but there's a big block which has happened in VST Industries. It'll be interesting to see who's participated. ITC is a different story. Godfrey is a one brand play. Which one is it?
I wouldn't know.
I don't remember right now. It's a one brand. I think 555.
Is that Goldflake?
Marlboro.
Oh,
Yeah.
Marlboro.
PCR,
Okay.
somebody just messaged me. Okay, so let's take a short break on that note. Come back and more stock specific analysis on the other side. I was confused. It's 555.
Welcome back. Big breakout happening on a lot of individual names. Take a look at Engineers India. Ajay was just flagging it out at the start of the show when that stock was high by just 3 to 4%. Right now, it's sitting with a gain of around 11%. So a massive surge right now, 12% higher on Engineers India. NHPC is the other one which is seeing quite a bit of spike. You also have Paradeep Phosphates, Prestige Estate, as well as PTC Industries as some of the other big gainers which are gaining ground. On the losing side, it is Vodafone Idea that continues to see quite a bit of slide after that clarification came from the company. Didn't look like it had any grounds in the first place itself, and now the official communication coming in from the company as well. But shifting focus to some national headlines, and truck drivers are staging protests in Maharashtra, Rajasthan, Gujarat, Haryana, Uttar Pradesh and a lot other regions of the country against the revamped law against the hit and run cases. Let's go across first up to my colleagues who are joining us with the latest from the on-ground story. Shweta is joining us from Mumbai. Shweta, take it away and tell us what exactly is happening on the ground.
Let me quickly cut across you to the visuals that what exactly is taking place in Mumbai. This is Shivdi location of Mumbai, and my video journalist is spanning the camera quickly just to show you. Point number one is heavy police bandobast here, and here in row you can see massive dumpers, trucks are being halted at this particular stop under the highway, and we are also joined by more than hundreds of truck drivers here. They have their own concerns, but remember, when it comes to the Bharatiya Nyaya Sanhita, there have been certain amendments being made, and this is not going well with the truck drivers. Firstly, on the hit and run cases, and this is the root cause why has been taking place, Ashish. There had been changes. Accordingly, it is being stated in the new amendment that now the hit and run cases would attract 7 lakhs of fine with 10 years of jail imprisonment.
Okay, and as a result of that, there are huge queues apparently in certain areas of the country, especially at petrol pumps. And there have been some other, look at those visuals, huge lines at the petrol pumps as well. Seems like there is a bit of a worry, especially the situation is aggravated in Srinagar, wherein there is, supply disruptions happening. Let's go across to Ravi Jhakar to get more understanding as to how this is likely to impact, and more importantly, when can we expect some resolution. Ravi, hi, thank you so much for making time and speaking with us. First up, tell me the on-ground situation that you are analyzing at this point of time. What's the extent of the breakdown that we have seen? Is it happening pan-India? Are there certain regions which are more impacted? The extent of the fleet which is involved in this kind of showdown of sorts?
No, so honestly, on the driver strikes and protests, perhaps our colleagues on the Gati side of business would be in a better position to comment on that. What I can say is that the recent amendments in the law have made certain provisions on which there have been discussions between the transport associations and the government. Any protest which turns beyond control is not good. But I believe that the situation seems to be under control. I'm not very familiar with the ground, to be honest. In terms of the importance of logistics industry, the government has always kept it at the forefront. So I'm sure the government would come to a amicable solution in terms of finding appropriate measures so that it is not impacting drivers who are important for the national economy, since transport industry kind of carries the whole economic transport, and the drivers are an important element of that. But beyond that, on the operating level, I cannot share much details.
Sure, but since we have you with us, just quickly talk to us about the Red Sea situation, because that was getting better, and then there was this another attack that happened right over the weekend. What's the current situation there?
Yeah, so in the Red Sea, as you are rightly mentioning, Maersk, CMA CGM, and a few shipping lines had already decided to resume services. This was on the back of guarantees from US Navy and other international forces who had reached some kind of a diplomatic agreement. However, the recent attack means that Maersk has again suspended for the next 2 days. We have to be watchful. There have been calls for, not doing the strikes on the US side. There's also been news of the Iranian vessels getting in. So it is difficult to see what would happen in the next 2 to 3 days. But at this point in time, the trade is not going through Red Sea. The shipping lines have continued to suspend for the next 2 days. What this means for the trade is that they have to go around the longer route, which means about 8 to 10 days of transit delays. There also means there could be constraints on the shipping capacity side. So from a shipping perspective, it is not a good thing. It means delays and additional costs as well for the shippers, and it would impact the Indian trade going into Europe and coming in from Europe as well. Also the Far East to Europe trade, which also passes through the Red Sea. But I would say that given there was a positive outlook and the shipping lines have also taken a call to suspend only for a couple of days, let's hope that the better sense prevails, and in the next couple of days we hear some good developments towards more peaceful resolution, and so that the trade can continue through the Red Sea. But at this point in time, for the next 2 days, shipping lines have suspended their services.
All right, Ravi, thank you very much for joining us on the show.
Yeah.
So that was an important issue to address. But moving on, focus is on the gas companies, the pipeline companies, the gas retailing companies, because the central government will fund pipeline infrastructure of city gas distribution companies going forward as well. ET now has learned that sources that center will give 50% of this fund and link it with the gas distribution network of the gas plants. Prakash Priyadarshi has got more details. How exactly will the structure work like? Prakash, tell us.
Yes, we're learning from our sources that the government will provide financial support to the city gas distribution companies. Financial support would be given to develop pipeline infrastructure in the country to connect the city gas distribution network to compressed biogas plant. An important development coming in. So informing that as per the plan, government will bear a burden of 50% of the overall project cost, and rest 50% would be absorbed by the city gas distribution companies. We also given to understand that the government is planning to spend around rupees 2,000 crore in the first phase on this plan, and the amount will be increased going forward as per the demand. We are given to understand that the Oil Ministry has prepared a final cabinet note, and it is expected that the Indian cabinet will give its final note very soon. The prime objective behind this proposal is to increase compressed biogas blending into natural gas going forward. Government has set a plan to increase compressed biogas blending into natural gas to 5% by the year 2027.
Thanks. A very important story coming in, and actually the stocks are reacting to the news flow that there's going to be additional support coming in from the government, and maybe we should pull up the city gas distribution stocks rather than the Nifty, because it's Mahanagar Gas, Gujarat Gas, as well as Indraprasth Gas. These are the stocks which are reacting, and we can see the moves coming in from the bottom of the day. These stocks have actually reacted positively because of the news flow that Prakash is talking about, that there's going to be additional support coming in from the government in terms of the infrastructure spend that we have seen for the sector. In fact, there's quite a bit of recovery throughout the market, I believe. Just let's pull up the intraday chart of Nifty as well as the mid-cap index and small-cap indices. If they've actually managed to move into the green, Nifty also has managed to move from the low of the day. Small cap continues to be in the red, just mildly so by 20 points, and mid cap too down about 85 points thereabouts. But yeah, I think it's individual names, Ajay, you'll have to spot which are actually doing the action, because other than that, at the index level, you're not able to witness any trend as such.
You're right. There are individual movers, kind of moving very well. I wanted to check, the port volumes of Adani ports have just come in. Nuresh, can you check Adani ports for us, because that stock also has rebounded very well. In fact, it is trading at day's high. Just an hour back, the Adani port volume data also came in strong. Where did the stock head from here? Almost knocking at 1100.
So one of the more positive charts in the whole large cap space, the stock had made a top around 900 odd levels back in 2021 March. And then over the next 2 years, we've seen multiple tops around the 900, 950 mark. Recently, we saw a big gap up move, and the stock continued well and gave a breakout and made a top of around 1100. For the last 2-3 weeks, it has been consolidating, making a flag formation here at 1000 to 1100. So positive on the stock. A trailing stop loss now comes to below 1020 levels and could see more momentum above 1100. So the charts are positive, could see further momentum above 1100.
One space which is very, very active today is the entire pharma pack, Kunal. What do you make of the breakout that you are seeing on the index, and which are the top names that you like from the pharma pack?
So I think a very strong breakout. In fact, when you were mentioning at the start, it was actually only the pharma stocks, right from the large cap names, Cipla, Lupin, Sun Pharma is, I think, looking very strong, charged up. Then you have Glenmark also, which is looking attractive. In fact, I was looking at the mid cap names, Granules, Strides, Pharma. Many of these stocks are also inching towards an individual breakout. Many of these stocks are coming back to their multi-month swing highs. So the prospect now looks attractive, and hopefully we are expecting that this could be a trend in the making for many of the underperforming names. Now, a few of the stocks which I believe traders could look at a buy even at current levels. Strides Pharma could be one of the stocks which is trading at 665, 670 approximately. That still seems to be a good buy at current levels. I would also believe that Glenmark Pharma, which has already confirmed a breakout above 850 levels today, looks attractive for a buy as well as a hold at current levels. And Granules is the other stock which has also completed a major multi-month flag pattern, bullish flag pattern for itself. So that could be another candidate from a short to medium term perspective.
Okay, point taken. Just wanted to quickly, flag off Lupin, because there was this brokerage action on that. Nomura had increased the target price, and the interesting bit was that this is one of the highest target prices that are there on Lupin. Around 1500 thereabouts was the target price that they had set, and I think this is the second or third brokerage which has actually come out with positive news flow on Lupin and upgraded the target price. So that stock is reacting positively. They like the pipeline which is there in US. That's why they've hiked the EPS estimates for the next 3 years by anywhere between 2 to 14%, and overall a positive momentum across the board as far as pharma as well as Lupin is concerned. But the closing trade ideas, let's take that from our chartists as well. Naresh, what's the stock that you would want to recommend as a closing trade right now?
So that would be a buy on Syngene. We've seen good momentum across the pharma space. Syngene has made a double bottom around 680 and starting to make a recovery. So good risk reward here, expecting a bounce towards 760 to 780 in the short term.
Not surprised to see a pharma name there, but Kunal, what about you?
So I'll go with Bajaj Finance as a buy. I think the stock is heading towards a breakout, and it's been a huge underperforming large cap name. So finally, it looks like that the stock is coming out of those underperforming ranges and looking quite attractive.
Actually, Bajaj Finance, not only Bajaj Finance, some of the smaller PSUs, look at Saturn Credit. They just did a QIP recently. A lot of NBFCs are raising money right now. And even Bajaj Finance did a QIP, after which it went sideways because a lump of $1 billion worth of shares hit the market. Pull up Saturn Credit. And Kunal, let's have a chart check there as well, because the trend is that around the fundraise, the stock is underperforming for some time, and then with the lag, the stock is coming back. Like Bajaj Finance and Saturn Credit is the same. How do the charts look for Saturn?
Yeah, so they are looking attractive. In fact, at current levels, today, in fact, if I'm not wrong, the stock has already made a fresh lifetime high. 276 was the previous high. 278 is today's high for Saturn, and I think it looks attractive because the last 8-9 months, the chunk of volumes which have happened for Saturn is quite huge. So on an average, it's been almost 80-85 lakhs on the weekly prospect for the stock, and compared to that in the previous 8-9 months back, the average volumes was just 3 lakhs to 4 lakhs. So it's been a significant jump of volumes, and when volumes participate on the upside, we see those stocks changing ranges for themselves and breaking past the new highs with a lot of ease. So I think that's what the charts for Saturn indicates.
Okay, interesting there. Already hitting a live high. Let's see where it heads from here on. But time now to take a short break on the show. When we come back, the last lap of the trading session.
Kunal, can you, Nuresh, let me come to you on Indigo. We saw a very good move in Indigo last series, almost going towards the 3100 mark, but is kind of coming back, slipping back. Where would you like to get back into this name, or you think that the rally for now is over?
So for now, in the near term, yesterday where it took a correction after a new 52-week high generally is not a strong signal. You should see some follow-up, and overall we again get back into that period when there is a overhang of the block coming in from the promoters. So at current levels, you would wait it out, wait for another block to happen, and then maybe start building up position. So at 3000 odd levels, the risk reward is not great. Any retest of 2650, 2700 is where you would want to get in. So I would expect some bit of a consolidation here for the stock. Would not go short, but would wait out for a 5 to 10% dip to actually start looking at it.
Fair point. Get into the name after a 5-10% dip. We have Nitin Raheja also joining us on the show as Executive Director at Julius Baer. Nitin, afternoon. Thank you so much for your time. Well, start of the new year, FII friends of yours have still not come back to the market and is now giving a sense that will the market oblige with a correction? Everybody is expecting one. What are your thoughts, initial thoughts?
Look, I think it's a correction that we have been long waiting for, and it hasn't happened. I mean, so markets are not normally oblige you when you want to, and will always catch you by surprise. But I think having said that, it clearly, even if there is a correction, I do not think there are going to be any, it's going to be a significant correction, right? You will have what is more of a bull market correction that will take place. I mean, just for example, like today in the morning, if the market was down and then it sort of bounced back. So I think people are waiting for these corrections to buy into them. So I would be, so while at the same time, when one looks at the fact that we've had 2 very strong months of market performance, and by that logic, these things never continue, month on month. So you will see a correction. Unfortunately, we don't know when. January has had a track record of starting off strongly and then correcting after some time. But, look, the point is that directionally, we know that we are in markets which are on an uptrend. We will get these bull market corrections. We can't plan for these bull market corrections. So I think one just needs to sort of remain invested, at least in the near future.
Nitin, where are you looking at this market, finding margin of safety? Because yes, you're right, market has given a very big burst of returns in a very short period of time, and still there is a lot of money waiting on the side. So for prudent investors who don't want to chase names which have already done very well and are looking for newer names, margin of safety? Where are they likely to spot it?
So look, I don't think just because a particular name has done well, one should not look at those names. I think it has got to do with more with the function of stick to investing in quality businesses, where growth is visible, is strong, and also these are companies who have very, very strong balance sheets, which enables them to invest for the future. So I think keep remaining invested in those. They might sometimes in the market, these companies might take breathers, but they will eventually come back. And also these are the kind of companies, whenever there is a correction, they will fall less and so on and so forth. So I think from a bottom-up perspective, stay focused on high-quality businesses. We have seen a lot of rotation happen. We've seen a lot of expectation built up in sectors that have corrected, hoping that a lot of those sectors, say for example IT, will come back far faster. And according to me, a lot of it is also hope trade that is being played out. So, I mean, and if you ask me a specific sector where I think the valuation, the growth, the pricing looks attractive, clearly it is the financials.
Financials is one space that we'd like to discuss more with you, Nitin. But in the meantime, let me actually go across to Somit. He's standing by. But what the brokerage's view is on India for 2024, which are the sectors or themes that they're betting big on? Somit, take it away.
Well, if you see for Nifty, what Jeffries is saying is that India's multi-year capex cycle has started to unfold in India, and they're expecting foreign flows to improve in the calendar year 2024 despite a strong flow that we had seen in the previous calendar year. Sector-wise, bank appear to award the best risk-reward ratio, and on the valuation front, they are saying that the relative valuations are still better, because if you see the 12-month forward valuations of Nifty, they stand at close to 20 times, which is higher than the past 10-year average, but it's trading at a premium of 67% compared to the emerging market, which is not much higher compared to what the historical averages have been. When it comes to Citi, they are saying that in 2023, if you see strong mutual fund flows were owing to reallocation of savings to equity funds, but as per their economists, the household savings have now exhausted, and going forward, the flows toward mutual funds could be on the lower side. They're expecting Nifty's EPS to grow around 17 to 20% in FY24 and around 14 to 15% in the next financial year, that is FY25. And they're also saying that the equity risk premium for Indian equities are at near record lows, and they're preferring large caps over mid caps and small caps for 2024. When it comes to Bernstein, they are saying that the upward revision to earnings might be limited going forward, and they're also saying that the valuations have inched up, making it challenging them to find new ideas, which is a sign of peaking as per Bernstein. Now they are saying that small and mid cap are trading at a highest premium to the large cap in the last 15 years, and though they are positive on India's macro cycle, but they are advising to book profits at this stage. Now when it comes to the Nifty target, Jeffries has a Nifty target of close to 24,000, which implies a upside of close to 12%. Citi's Nifty target for December 2024 is close to 22,500, while that of Bernstein stands at close to 23,500. Lastly, when it comes to sectoral and stock picks for Jeffries, their key picks are Axis Bank, ICICI Bank, Macrotech, Godrej Properties, Coal India. Along with that is JSW Energy, TVS Motor, Adani Ports, Bharti Airtel and Kajaria Ceramics. For Citi, they have a contrarian bet on HDFC Bank, Cipla, Devyani International and Industars and Endurance Tech. While sector-wise, they are preferring PSU utilities, defense, industrials and banks and insurance, while they are underweight on IT and metals and consumer discretionary. And lastly, when it comes to Bernstein, they have downgraded small and mid cap to underweight as relative to Nifty, that is a large cap. They have upgraded IT services to overweight. They have downgraded consumer tech to equal weight. And they have overweight rating on financials and healthcare, which is as similar to what it was earlier. When it comes to metal, they have upgraded the counter to equal weight, and they have downgraded consumer tech, again real estate and cement to equal weight, while they are preferring select stocks when it comes to sectors like consumer, industrials and utilities.
All right, Somit, thanks very much for that. In fact, let me take a leaf out of that content. And Nitin, I want to discuss about commodity stocks with you. So the PSU commodity stocks in particular, Coal India, Hind Copper, all of them have rallied massively. Coal India, of course, has even raised their production guidance, but We haven't heard anything very clearly from Hindustan Copper for that matter. How have you approached this pocket of commodities, PSUs?
So look, I think what you're seeing, I think there are two factors that are playing out in the market. Because there is a sizable run up in the markets, and rotationally each sector has done well. So you are seeing a sector rotation that is taking place where people are looking for sectors that are relatively cheap, and given where market valuations are, the discount of those sectors has widened, and hence you are seeing this whole rotational trade take place. Last month we saw that happening in utilities, we saw that happening in industrials, and so on and so forth. Now, I think the other element that is playing out, that's how rotationally the liquidity is moving. The other element that is playing out is this whole hope that with the present incumbent government expected to come back, this pace of capex and infrastructure spending is going to continue. And clearly out there, utilities who have traditionally have always been regulated businesses and continue to do so, haven't seen any capex, and hence because of that there is an expectation of growth falling in place on top of the traditional utility business that they are in. Given both of these, commodities are overriding on top of that, especially commodities which are domestically produced and are used domestically, and hence you have the case of coal companies doing well and so on and so forth. So I think, but we've seen one leg of re-rating that has taken place clearly out there. I don't see these as very high growth businesses, so I would be a little cautious on them. From a future return perspective, it's been a very, very strong year for most of them, but I don't see them really replicating these returns going ahead.
Caution is definitely warranted because the kind of those meteoric rise, 200% return on REC, PFC or even more, the big listing gains that we saw in IRET and a lot of other PSU names have actually done quite well. In fact, if I have it right, HPCL in the last quarter of the calendar year 23 had managed to surge 70%, so massive uptick across the board. But quickly right now, wanted to flag out Mrs. Bector's because that one is perking up. In fact, that stock is higher by 7% suddenly, and Kalyan Jewellers is the other one which is coming up on the radar. There is a bit of movement there as well. We'll track some of these stocks, but before that, let me go across to my colleague Asta because she's bringing in an ET Now exclusive now. The tussle between the Hindustan Unilever company as well as its distributors over a recent margin payout proposal is becoming more tense. What's the latest, Asta?
Yeah, Anisha, as we can see that there is a recent update on the HUL distributors case. Now, the distributors are demanding to meet with Rohit Java, who is the all-time MD and CEO of the company. This disagreement between the distributors and the HUL company happened when the company changed the margin structure for the distributors. They increased their variable margin from 30 points and it decreased their fixed margin to 3.3% from 3.9%. Now the distributors have sent the mail and demanded to meet with Rohit Java, who is the MD and CEO of the company, yesterday, and they gave them 10 days notice to reconsider their decision. So the distributors have demanded earlier also 5% fixed basis margin for them plus additional incentives. So if the company doesn't agree to their terms, they may stop taking goods from the HUL and selling it to retailers, and if they agree to the terms, there will be again another meeting on 10th of January where all the distributors will sit and discuss their plan of discussion. So if the company doesn't agree, they will stop purchasing the goods from the HUL and stop selling to the retailers. So this is the recent update till now.
Thanks very much for that, Astha. In fact, consumer names, Nitin, where are you placed on some of these consumer names? HUL, Dabur, Miracles of the world, they have actually underperforming for some time now because of very meek volumes, and the commentary coming from some of the heads of these companies also are not enthusing a lot of confidence. Would you look at this place or not yet?
Look, when I look at this whole place from a growth value proposition, I mean, clearly they're great businesses, great cash flows, great return numbers, but there is growth which is missing out there. And typically we look at businesses, who are in a high growth mode. We like to invest in businesses where we believe, their earnings can, sort of grow and double at almost 15 to 16% compounded over the next 5 years. We don't find that in some of these businesses. At the same time, the valuations are at very, very premium levels. So it's not a segment that particularly excites us.
Okay, not the most exciting sector, but there has been a lot of this action that we have seen in PSUs. Defense as a pack has been doing well, and that's partly on the account of the kind of foreign relations that we have seen building up building up over the last 4 to 5 years. And Republic Day, of course, is one of such events, which is perhaps a way to strengthen these relationships. Now, ahead of that, IMD has actually predicted cold wave conditions in central and some parts in the northwest region this month, and there may be dense fog days over parts of northwest and east India over the next 3 days. With the recent plunge in temperature, the national capital is still colder than several hill stations. The cold wave conditions and fog have already disrupted rail and other air traffic in North India, but what they have not disrupted is the kind of drills and practices going on for the Republic Day. In fact, undeterred by the sharp chill in the air on a day when the city recorded a minimum temperature, soldiers were seen marching to drum beats as during dress rehearsals, the Republic Day parade at the Kartavya Path in the national capital. Various departments of security forces participated in the parade rehearsal. A formal invitation to French President Emmanuel Macron, who's going to be the chief guest at the 75th Republic as well. So that's the interesting bit coming in as far as what's happening in terms of Indian global relations. But that's exactly the question that I want to pose to you, Nitin. We spoke about a couple of these public sector entities which look like that they are in a bit of an overdrive. But what about defense? Because the order books that these companies have got a long gestation period, and they have the visibility of the next 5 to 10 years. And with the kind of relations that we are building up, seems like there's a lot of export opportunity also opening up.
So, I mean, clearly there is a lot of tailwinds given the whole government policy of, indigenizing a lot of the defense components and so on and so forth. So, I mean, so you're seeing a lot of optimism that is flowing through there today, led by government order books and so on and so forth. And that is visible in some of the order books of many companies and so on. But the kind of valuations that we are seeing with a lot of these companies today, believe me, when we will see the actual execution take place over the next few years, it's going to be lumpy. It's a lot like what we saw in the late 2008 in terms of the growth of infrastructure companies and road construction companies, large order books, visibility, but cash flows tend to be very erratic in these businesses. So I don't think the kind of valuations that they trade at sort of warrants the scenario. Clearly, yes, growth is going to happen. Clearly, there is a whole tailwind that is moving behind. But I think a lot of it is actually getting priced into the prices today.
Nitin, since you prefer high growth companies, would you take a look at a Zomato or delivery for that matter at current levels? They are significantly lower than where they were, and of course now the management appears sound much more profit conscious.
No, absolutely. I think some of these new age businesses are waking up to the reality of the times, and the reality of the times is that the path to profitability has to be faster, and they don't have access to free cash. When I refer to free cash, I'm talking of access to the VCs and P money the way they had in the past many years, because even today money carries a cost. So and they are also further coming to the public markets, which are absolutely unforgiving in terms of how they value you. So I think a lot of these companies have actually done things, changed their business model and evolved. So, the new age businesses, the way we look at it, are here to stay. The business model is yet evolving, and we are seeing them go on a faster growth to profitability. And surely it's an interesting sector to, look at.
Interesting sector to look at. But Kunal, what's your view on the hospitality sector? Lemon Tree is, of course, one stock which is seeing quite a bit of price volume action today, partly on account of the Motilal calling it the top pick for 2024. But what's your top pick from the hospitality sector this year?
So Indian Hotels has been one of the top picks, but I think even last 2 months, there was this stark underperformance, which was visible in Chalet Hotels and Lemon Tree. And I think these stocks have now just started to cover up the underperformance for themselves. Now, for example, Lemon Tree in the last, Chalet Hotels in the last 2 months, I think from 600 levels, when the stock retraced back towards its 50-day moving average, from there it's moved towards 700 mark. The chunk of volumes which have happened in the range of the 600 to 700 is exceptionally high as compared to the previous consolidation range for Chalet. Same is the case with Lemon Tree. Of course, after today, today's strong price volume breakout, it changes the range for itself yet again from 110.15, which has been the broad support range for the stock, to a breakout of 120, 125, and that should now act as a fresh base for the stock. Oriental Hotel is something which I think closer to 105, 120 was forming a triangular pattern breakout for itself. That stock has started to look very attractive. So there are many stocks, large cap ones from the more formidable ones. Indian Hotel is something which I've been recommending, but Chalet even at current levels and Lemon Tree even after this breakout today, I think both of them, they still look attractive.
We're just looking at that M&M Finance Q3 disbursement updates coming in, 5% growth for this quarter, YOY growth. It will be interesting how the street actually sees that. The stock is off lows though. Nitin, have you looked at some of these NBFCs which have been growing at a very fast clip, in fact, despite of the bit of a frown from the regulator as well? How are your thoughts on that one? Would you buy into some of these NBFCs?
So I think, clearly there is value in a lot of these NBFCs out there, despite the changing regulatory framework that we saw on the part of the RBI and the concerns on personal and unsecured loans, because NBFCs actually play a very important and strategic role in the economy from a growth perspective. But generally speaking, one of the key elements that we look for in an NBFC is the whole underwriting culture and norms, and that according to me is the key distinguishing point, and all the whole re-rating that has happened in the sector in terms of, if you look at the most successful NBFCs, growth being one part, growth runway is very clearly there and defined for most of them. It's the underwriting quality which differentiates what happens to the return on asset or return on equity, and that's where I think the leaders in the pack have actually gone far ahead and trade at a premium. But as a pack, as I said, we are very, very positive on the overall financial pack, and that includes NBFCs.
Continue to stay positive on this pack as a whole, but I think the number that is there from M&M this time seems a bit disappointing, because in the month of November this number was close to 5,300 odd crores. In October as well this number was about 5,000 crores. So a bit of a slip coming in the month of December, even if the collection efficiency has been maintained at around 98%. Time now to take the BTSC ideas from our chartists. Naresh, what's the buy today, sell tomorrow idea?
First is the buy on Syngene, which has started showing a recovery, a classical double bottom here, stop loss at 715, target price of 735. Second is a buy on ONGC, testing the previous breakouts of 210, 212. Good risk reward buy here, stop loss at 205, target price of 212.
Point taken. What about you, Kunal? What are the BTSC trades that you're identifying?
So Godrej Properties is something which looks attractive, trading about 2000 levels. So would suggest a buy with a target of 2090, and stop loss could be kept at 1975. And AB Capital apparently has confirmed a very strong breakout for itself. It's coming out after 5 months of steep and sharp correction for itself. So I believe that this could be a very strong turnaround candidate from current levels. 180 is an immediate target, stop loss at 165.
Okay, so maybe after AB Fashions, it's time now for AB Capital to also catch up from the group. That is one of the top bets coming in from Kunal as well. But financials, that's the theme I wanted to discuss further with you, Nitin. I know you spoke about NBFCs, how you like that pack. But within the banking sector as well, the most underperformers have been the top private bank names. The HDFC banks, ICICI Bank, Kotaks of the world. What do you think would be the trigger that will mark the turnaround for these stocks?
I think one of the key triggers is going to be the fact that actually there will be two triggers that will happen. So like I talked to you earlier about how that there is this whole sector rotational going on, where people are looking at which are the next stocks or sectors which are cheaper on a relative basis, and then there's this whole trade that is going on. So this year we had this phenomena where within the financials, the second tier banks actually who had been significantly derated and were trading at sharp discounts actually turned out to be best performers. So whether it was the small finance banks, whether it was a lot of the tier 2 banks, and so on and so forth. So we saw a big rally in this. So the valuation gap between the top banks and the tier 2 banks have now narrowed. So which sort of makes the attractiveness relatively of the larger banks look better. The second element that is going to happen is that we are also seeing a tightening of liquidity, and that's reflected in the fact that we've seen some of the PSU banks actually raise deposit rates. So we're seeing a tightening, and most banks, if you notice the last few quarter numbers, they've been struggling with deposits. So whenever there is a war on deposits, it's the larger banks which stand out well because of their strong liability franchise. So that will work for them. And the third element is that suppose 6 months down the road, or in the second half of this year, you were to see rate cuts actually transpire. At that period of time, some of these larger banks who have superior return on asset and return on equity standing there would actually get re-rated from where they stand today. So I think, it sort of all portends very well for some of the large banks now.
Okay, fair enough. That point is taken as far as the large banking sector and the index is concerned as well. But since we're on the topic of financials, let's listen into the view of Ravi Dharamshi as well, because he continues to be quite bullish on the financial space.
I say the financials as a theme is something that we continue to be bullish on. Large private sector banks have the right to win, which there was a case for the PSU banks probably to have a mean reversion in terms of valuation because the cycle was favorable. But if you look at which are the balance sheet which are strong, where it is far less leveraged, all the PSU banks are 15x leveraged, all the private banks are 3x, 4x leveraged. The ROEs have the room to improve from 13-14% to 17-18%. And this is exactly the kind of scenario that you want, where you want to play that cycle. A 3-5 years of some of the couple of the leader banks not giving any kind of a return creates the perfect base for to start thinking of placing bets in terms of from 3 to 5 years perspective. So I am again, without naming anyone, the cycle in financials remains in favor. Large lending, the private banks remains favorable. The capex cycle is just beginning, the private capex cycle. The corporate lending growth will pick up going forward. I don't think we are, so a lot of the pre-election activity has kind of stalled right now. Because of the election, the capex activity will stall in the next 3-4 months. But post that, there should be a pickup again. If the things pan out as per what market is anticipating, which is the current government comes back, then the capex will again pick up and a lot of money will flow through. So I think large private banks are a perfect proxy to play that from a longer term perspective.
Yeah, but for now, banking index is actually taking a sharper knock while rest of the market has recovered. The Nifty bank is now down 500 points. ICICI Bank pressurizing the index by as much as 30 points. Kotak Mahindra Bank is coming under pressure. Anything specific, Kunal, that we should watch out for some of these private banking names and the weakness on charts?
No, in fact, the data which I flagged off on the options is the more important thing to watch out for, because tomorrow would be the weekly expiry for the bank Nifty, and just one day prior to that there has been a heavy amount of shorting which has happened, and it's more of a courageous shorting because traders are now looking to short even the at the money strikes or slight in the money strikes of 47,700 on the bank Nifty, 47,800 on the bank Nifty, and even a good amount of writing which is seen at 48,000 strikes. So which means that tomorrow could be an interesting day if in case the indices open with even a slight tinge of positivity. Then all of these call writers could probably get into a strong short covering mode, which could lead into a possibly strong burst of upside for the bank Nifty tomorrow. So I think what matters tomorrow is how the indices open. If in case we open on a downward side, then we could probably drift below that 47,700 mark. But if we open with a positive upside, then I think there should be a very strong momentum on the second half tomorrow.
Okay, we'll track that. But for now, whatever early cues we have from the pre-market rates in US are very mixed because the Nasdaq is suggesting it's going to start with a downtick of 25 points after the holiday, while Dow is suggesting an uptick. On that note, Nitin, Naresh, Kunal, we let you go. Thanks so much for making time and speaking with us today. It was another topsy-turvy ride that we saw for the markets today. Below the mark of 21,700, we did try to make a recovery on an intraday basis, managed to go to that 21,660 mark, but not a runaway rally. There's definite buying fatigue which is visible at this moment. Bank Nifty, that